Hi everyone, welcome to this live coverage. As usual, I'm here with Yohay Elam from Forex Crunch and Mauricio Carrillo to walk you through the second review or the second release of the US GDP for the second quarter of the year. How are you guys?
Great, great. Good to be
Yeah,
here.
I'm here. Good to be here with you guys. How are you, Valeria?
All fine here too.
Okay, guys. So what we can expect for today is expecting the same reading of the first release, right?
Yeah, we are expecting no change from the advanced GDP figure released last month. And to be honest, I'm not expecting anything until we have Janet Yellen's words at Jackson Hole later. I do believe at 14 GMT. So I'm seriously believing that we are not going to get much of the market today with the GDP unless we have a really, really shocking deviation in the number.
Yeah, I share your thought. And Yohei think the same. He was just telling me that everybody is waiting for Jelen, right, Yohei?
Yeah, must say I'll add that perhaps Yon will also disappoint by not saying anything new or being the usual dovish self. But anyway, this is the main dish for today, the speech at Jackson Hole. GDP, because Jackson Hole looks towards the future of monetary policy, and GDP is for the second quarter. And
Yeah.
as Valeria mentioned, a very small change is expected anyway.
Oh, okay, let me. We are. What are we? Okay. Okay, guys. Okay, yeah, sorry. Let me. I lost the handout. Okay, so welcome everybody. We are here in this GDP live coverage. So, Valeria, guys, if you have any questions, just feel free to ask everything. Valeria will be here, and Yohei will be here to answer any of your doubts. So, Valeria, what are the pairs to watch right now in the markets?
Well, to be honest, everything but the euro dollar, because I was watching earlier today, the pair has been stuck in a 100 pips range ever since the week started. We are hovering around 113 and getting nothing. I do believe that if we had a negative reading and a dovish Chilean, the pair to trade will be the GBP dollar because pound has been on steady recovery. Data has been pretty supportive. Investors are now realizing that maybe they rushed to price in an economic collapse in the United Kingdom that is actually not taking place, at least so far, right? After Brexit, I mean. So the pound seems uh, more strong or stronger than other currencies at this point. And in fact, it has been outperforming major pairs for all of the week. And I will watch also the dollar Japanese yen because despite the pair is holding above 100, it's unable to recover, right? It's still very at risk of breaking lower, and despite whatever the Bank of Japan has to say or menace about interventions, I do believe that if we have negative news coming from the US, that will be probably the second more interesting pair to trade.
Yeah.
Okay, and Yohei, what do you think?
Well, as Valeria said, when I get back to the pound, indeed we had some recovery in the pound. The biggest event was actually last week with the release of retail sales, which showed that actually UK consumers bought quite a lot in July, and it was attributed to good weather. And if weather is important, that means that Brexit was not that important. And also the soft data, all the surveys that were terrible at the beginning, they showed doom and gloom. Now they also did some catch up with reality, and yes, things could be rocky in the future, but as I read, someone said it could be more like a puncture in the wheel and not a car crash. The UK economy, it could suffer from Brexit, but not perhaps a long-term impact, depressing impact, not a terrible disaster. And regarding the yen, I think that we got stuck here around 100. And that means, I think we talked in the past that markets were defying the Bank of Japan, that they were buying yen, buying yen. I think now there's some better equilibrium between speculators and the Bank of Japan or others. So we did find some kind of leveling, but we know from the end that these things don't last too long. So maybe today's GDP or Jackson Hole will make the break for the pair. Yeah.
Okay, thank you, Yohay. And Valeria, what do you think about the gold? I think the gold is reacting.
Yeah, it's recovering some ground. There was a huge decline earlier this week, right? And there was not a clear catalyst behind such move. Let me show you a chart this one. But speculation that the Fed may be willing to act earlier than expected because of some hawkish comments coming from, I do believe this time it was Williams, or because, Fed officers had been on the wire for the past 3 weeks talking about a rate hike and the economy being strong, and it's time to do it, but still the minutes of the latest minutes show that there's a split aim in between them, that there's not a clear date or timing for the hike. And the market is uncertain about what they will decide, right? I know that gold has been reacting mostly to the Fed ever since, I don't know, a year or over. So those speculations that the Fed may raise rates earlier was partially behind the decline, and now we are recovering some ground. But I don't have it clear. I believe that we're still in consolidative stage, right? Because after this big rally, the pair has been holding above the 38.2. And this weekly retracement has been quite limited. So for the most, I do expect more consolidation and even a break higher if we have a negative outcome from the Fed, right? Nevertheless, 33, 35 is the area I'm looking right now. We have plenty of highs and lows in between the levels, and the Fibonacci retracement that has been quite a nice support resistance over this past couple of weeks. So that's the level I'm looking right now. If we can close the week above that level, then there's scope for further recoveries over the upcoming days.
And now that you have mentioned the Fed official that he should rise the inflation target for the Fed, right?
Yeah, there was some talking about it, changing their inflation target from 2 to 3 or even 4, but I'm not sure if we could take that like a fact these days. It has been some talking, but at this point, I do believe that the market is more worried about when the Fed will finally raise rates rather than thinking of the probability of a change in the Fed's inflation target. I don't believe it's relevant, for the market at this point.
Yeah, but it should mean that we can expect a delay in the interest rate because if targets change.
Inflation is as far away from 2 as it is from 3, so
Yeah.
I'm not sure if that can change the picture that much if we said, well, the target now is 3 instead of 2.
And what do you think, Yohay?
Yeah, at the moment it seems more of an academic discussion if to change the inflation target or to change the nominal GDP, to target, nominal GDP. That means, for example, saying we want nominal GDP to reach 5%, and in normal times it should be 3% growth, 2% inflation, 3% real growth, 2% inflation, and in worse times it can be 1% real growth, 4% inflation. This is not a new idea, but many ideas have been floating. Talk about reforming the Fed, auditing it. This might be discussed maybe in Jackson Hole, but again, markets are looking. The question is, when will the next rate hike come? For me, the answer is maybe December, not September for sure. And in recent days, as Valeria mentioned, a few Fed officials talked about September being live. I think they have no other option but to tell us that their meetings are meaningful, but I don't think they're going to raise rates before the elections. And the data in the United States is, well, this week it's been better, but few weeks ago it was terrible with the retail sales. So I don't think if they have it out, they stay out. That means they're dovish, and that's what markets are looking for.
Yeah, thank you, Yohay. Now that we are talking about the Federal Reserve, what's market expecting for Jackson Hole? Why market is so waiting, for Janet Yellen words today?
Well, because I believe it was 2 or 3 years ago, 3 years ago, right? Was when not Yellen but Bernanke who said that, okay, the easing part is over, we are ready to start tightening. That happened in Jackson Hole. They take long before taking rates higher back, and they did just one, and it's 0.25, but it was a major event for the market. It was a breakout point in the Fed's economic policy, and I do believe that that's why we are paying so much attention to this event today.
And we are expecting Yellen saying something like that, or there's time to hike interest rate, but it was something that they started talking like 1 year or 1.5 years ago. So what we can expect for today?
To be honest, I do believe that the market is expecting way too much from Yellen today. But I'm not sure if she will provide as much as the market wants, right? But the fact is that the market has been on hold ever since the week started, waiting for this event. So, okay, this is what we got. So we have to understand it if we want to take successful trades. You know what I mean? But I don't expect her to add much more to what we already know to the market.
Yeah, I agree. Yeah, Jackson Hole is famous for Bernanke speeches. Also in 2010, he gave us some hint about QE2. And Yellen only once she said something really shocking. It was the beginning of her tenure. I think she had this rate decision press conference, and she was asked what would be a considerable time before raising rates. She said, I guess something like 6 months. And markets were alert, okay, a rate hike is coming soon. And since then, she mastered the art of not saying anything.
She learned the lesson that time. Her first speech was terrible. Trigger wild market moves, said something. Well, let's see, 6 months, and wow, boom. So she has been more and more cautious ever since.
Yeah, and regarding Jackson Hole, I think that in one of the years she even skipped the event. So
yeah, you're right. I didn't remember that.
Anyway, or maybe I think she skipped the event because it wasn't eventful. Nothing happened. So anyway, yeah, the expectations for rate hike did rise a bit in recent weeks because, well, we had a few positive figures, new home sales this week, and also durable goods orders. But again, I don't see them raising rates. Currently, the chart that I have shows 21% of rate hike according to bond markets in September. And in December, after the elections, about 50-50, and I would say that's more realistic. I mean, if everything's okay with the economy, then we can have a second rate hike 1 year after the first.
Yeah, you made a case in one of your previous videos, Yohay, that you say that the Fed won't hike interest rate because it will be too, I don't know how to say, too complicated to explain to people why they are hiking interest rates just before the election. It could be like a disappointment for Donald Trump or like a hurting for Hillary Clinton. What do you think about that?
Yeah, central banks, they want the public to see them as independent institutions that don't participate in politics. It's like this everywhere. In fact, by doing so, I mean, they are actually listening to politicians. In this case, I think that for Clinton it would be bad because sort of a rate hike would hurt the stock exchange, and she's the incumbent, sort of on the ticket of Barack Obama. And also, so she wouldn't like it, her campaign would not like it. Also, Donald Trump would not like it because he said he's a man of low interest rates. Well, he says so many things in all directions, but anyway, the Fed would not like to be in the attention of of the political cycle. So and really, it's not that the economy is steaming hot and
Yeah.
they must raise rates now before inflation gets out of control. We're not talking about such a situation. So the Fed usually prefers waiting, and the elections provide another pretext, another excuse. So why not wait? Yeah.
And in your words, Yohay, do you think that the United States is going well in the economy, or we should? Yeah, it's something that United States needs to make America great again.
If Trump wins, that will never happen.
They'll be great at something, but I don't know what. Anyway, the US economy is moving slowly like the rest of the world. The population is aging. We don't have a boom, but at least we don't have a bust. We have a very slow recovery in the past 7 years. It could be worse. In Europe, the unemployment rate is higher and less hope and less optimism. So I don't think the U.S. economy is maybe really great like Obama describes it, but not living hell like Trump's speech back then in the convention describes it. So it's the new mediocre, the boring, very slow, frustrating growth, but no boom and bust. So I don't know, half glass empty, half glass full, whatever you want to pick.
Yeah, I agree with you. Valeria, I want you to explain, in your opinion, what will be the effects in euro dollar or in the dollar as a currency, the Fed with Donald Trump presidency or Hillary Clinton
I
presidency.
have no idea, to be honest. I have no idea how the dollar will react to any of them.
But do you know when the dollar could be more volatile if Donald Trump tops the polls, or no, or what do you think?
I guess so, but to be honest, I don't know how the market could react to one or the other. For me, as a foreign, uh, as I see the things, sorry, is that Donald Trump as a president will be a step back in the U.S. Life. You know, the big American dream. I have been thinking this for so long. I wish I could explain it great. See, I live in South America, right? But all of my grandparents were European, right? So we are foreigners in this land. The same happens in America, right? Donald Trump is talking about segregating half the population of a country, but to be honest, I do believe his grandparents were probably Europeans, right? He's not like an Indian native, as far as I know. So that's what I'm seeing all through the world, right? We are making breaches in between people. Politicians that do that don't have a good future, and they are harming their nations. In my view, okay. So I don't see how America can become greater or better if he wins elections, right? Still, it's not that it's going to change my life or affect me much. I don't know. If he wins, okay. I do believe that in my scale, from 1 to 10, America would lose 6 points, you know? United States, I mean. So, I guess, I don't know. That's what I'm thinking, you know? His policies, what he's asking, or he's trying to make of the U.S. is not make it once again the biggest or the greatest country in the world. It's making it the worst.
The war. Yeah, it's something is clear that the United States will not be the same anymore after Donald Trump's candidacy. You know, something has changed as the world, the society is changing, new technology is coming.
Yeah, the people is blaming. I don't know. In the case of America, blaming aliens of a bad economy. We're always blaming someone else. I'm not saying that only happens in America, you know, and some countries are aliens, and some other countries are other races, and other countries are whatever. But we're blaming someone else. People is blaming people for the chaos, right? And people should blame politicians for the cows. Yeah, all left, right, wing, center, all politicians are guilty of this. Not the people, not the other people, but well, that's really, really a personal view. So I won't say
Yeah.
anything. I get in trouble if I keep talking.
I can say that I agree. Blaming an external enemy, I think, always works
Mhm.
for politicians. I think it worked. I think the Romans began with this, but anyway, you see it. I mean, in my country, in Israel, they always, if there's trouble at home, some corruption, it's always good to find something with the borders, some clash with the enemy, with the Arabs, and um, anyway, in terms of Donald Trump and markets, I think usually markets prefer a Republican president. They're seen as more market friendly, better for stocks. In this
Mhm.
case, Clinton is sort of centrist, foreign policy hawk, not that far from. I mean, we know who Clinton is. She's been in the public eye for a long time. We know that she continues the policy of Obama. Her husband has been president, Bill Clinton. So we know what we get. Donald Trump, he says so many things that are contradictory, and the anti-trade sentiment. So in this case, I think markets do prefer Clinton. My guess is currently Clinton has a significant lead, but everything is still open. If Trump gets closer in the polls, and that's certainly possible, that the race will tighten, then I believe markets will be more afraid, and the currency to gain from this would be the Japanese yen, the safe haven currency. But I'll just mention, currently markets have not been focusing on the elections. The first debate is on September 26th, and that's when I think things will get much more interesting. That's also after the Fed decision, after the ECB decision, so then it'll be a good time to focus on politics.
September what?
26th.
Okay, thank you.
Okay,
1 month.
yeah. Okay, guys, we are 4 minutes to go, and right now the yen is moving. What's going on in the yen, Valeria?
It's losing a bit of ground. I do believe that everything's going against the grain back by the Swiss. So I guess we have the Swiss National Bank playing around. But for the most, I do believe that what's going on is that the market is uh, fixing positions ahead of data, and UN is not that convinced today that we may get a rate hike on September. Gold is rising, commodity currencies are also rising. So in
Mhm.
fact, you believe it's moving, but it's not, you know.
Mhm.
it, it's trading 30 pips away, 25 pips away from its daily high. So it's actually not moving much.
Yeah, I see it as range trading, nervous trading before the release.
Yeah.
What number could spur the dollar to the downside? Which number will fuel the dollar for a rally, in your
And
opinion?
anything about below what we're expecting, I don't know, maybe it's 0.4 or less.
Yeah, I think if it's under 1%, it's sort of psychologically negative. Um, Expectations are quite low in any case. I'll
Yeah.
just remind everybody it's annualized growth. That means a quarter over quarter, 1.2% is actually 1.2 is annualized. That means quarter over quarter it's about 0.3.
Yeah, fine. Yeah.
So yeah,
And we have trade balance, right? Yohay?
we also have
Yeah.
trade balance.
Yeah, but the market hardly pays attention to it. We have weekly employment claims also. No, well, yesterday.
Was this really?
And Yohay, now I'm watching, well, it's GDP of UK. What happened this morning?
No surprises in the UK. Usually very small revisions, or none at all. This time, none at all. It was confirmed at 0.6 quarter over quarter, or 2.2% year over year, exactly like last time, exactly as expected. There were some changes in the components. One of them showed a bit more investment, and that's good news. Remember that it's pre-Brexit, so at least we know that in the run-up to the referendum, investors weren't scared of the referendum results. But it'll be more interesting to see the post-referendum GDP growth, Q3.
Yeah, anyway, most of the pre-referendum data, I mean, data, was a bit disappointing, right? Like market was actually, the economy was actually on hold. This was a bit of a positive surprise for me. Anyway, that is coming. There we go. Remember, we have a bit of delay, guys.
Yeah, 1 more minute to go. Tick tock, tick tock, tick tock.
Yeah,
10 seconds.
almost there. Yeah.
1.1, as expected.
1.1. As expected.
Okay. And the market didn't react.
Dollar yen, not going anywhere.
Nothing.
Euro dollar, nothing. Very slight. Maybe the US dollar is dropping, but maybe half a pip, maybe. Oh, it's rising against the Canadian dollar.
The Swiss is breaking up.
Oh yeah.
Yeah.
I guess the S&P is active. Apart from that, markets are asleep.
Market, yeah, stocks remains down, negative, but not that much.
Let's see if we have any interesting data in the various components. Well, I mentioned the trade balance, so came out at a deficit of 59.3 billion, the goods trade balance. The GDP price index 2.3. I wouldn't say anything big.
Nothing actually, yeah. It can trigger big market moves. The Swiss was already under pressure and heavy news. That's why it's probably the national bank there.
Consumer spending, 4.4.
Yeah, that's good. It's the good type of growth. 4.4 instead of.
Personal consumption, yes.
So I would say
Oh, nothing. At least for now.
Yeah.
no big changes.
Elas is asking us in the chat if we have any trading idea now.
No, not until Yellen, to be honest. As I said at the beginning, with a flat reading, not big changes, not big divergences between expected and actual. The market was expected to do this, not react and wait for Yellen. As I said also earlier, market is expecting way too much from Yellen, but that's what the market is doing, and we can't go against that.
Yeah. So as Valeria said, Jackson Hole Symposium, they're already over there. Also Kuroda is there, governor of the Bank of Japan, also other central bankers. I see now that Kaplan of the Fed is giving an interview on Bloomberg TV. But yeah, Yellen can just say nothing,
Yeah.
or basically dovish, and this could hurt the dollar, or she can surprise by. It will be a big surprise if she gives us a hint for rate hike in September, and in this case the dollar will shoot higher. Very low chances. Kaplan of the Fed says we need structural fiscal policy to augment Fed policy. Continuing the trend from Draghi, they began telling governments more and more, do more. Governments, we can't do everything on our own.
I believe many central bankers are saying that not only about the U.S. government. We have something quite similar coming from, outgoing Australian Governor Stevens, right?
Yeah.
Well, that reaffirms the new mediocre that you said before. Not only a good speed in GDP growth. Oh well, they're in better shape than Europe and than Japan and also than all the advanced economies, right, Yohay?
Yeah. It's good to be more coordinated.
And you have a revision from the previous quarters, right?
I didn't see.
I didn't see. I think last time we had a revision, but not this time. In July, when the US government releases the first estimate of Q2 growth, they also revise 2-3 years backwards all the data, and that's what we had last time. But this time, as far as I know, we don't have any kind of revision.
Okay, it's Friday. Well, it's the weekend. I know. We're waiting for Jackson Hole.
Yeah. Yeah, dollar yen, well, falling a bit more. Maybe. 2-3 pips? No. Almost no reaction to GDP.
This year is slightly higher, right? 113. Okay, only the yen, but what? 10 pips, 5 pips.
There is no question here.
Right? Sorry, what did you say, guys?
Nothing, no, just checking if we have any question, but nothing at all.
Okay.
What did you say?
No, nothing. Not
Okay.
much. Unfortunately, we like it or not, the market is waiting, and we have to wait too.
Yeah. There is the goal is testing a level in the 4 hours chart, right? Valeria is
The 20 simple moving average, yeah. But still strongly bearish. The Fibonacci area between 31 and 35. We have the Fib on multiple highs and lows from these past weeks in the 4-hour charts, so I do believe that's the area to take. Right, take a look.
Yeah. Talked about US politics. So what I'm showing now on the screen is, according to a website called 538, Nate Silver, the guy who estimated, forecast correctly the previous elections, he sees at the moment Hillary Clinton winning with an 83% chance and
Okay.
17% for Donald Trump.
Yeah, there is a chances. There is not like a poll. There is the chances of winning. Not like Hillary Clinton is leading by 80 points.
Yeah, it's an aggregated, very complicated aggregation of different polls. So according to their calculation, Hillary Clinton now gets 48.5% and Donald Trump 41.6%, so nearly 7 points margin. And this gives Clinton a good chance of winning, but as I said, the process in the United States is so long, so we have 2.5 months to go.
CNN report this week, I guess it was CNN report that Wall Street in the first position was Hillary Clinton, but in the second was Johnson, not even Donald Trump.
Yeah. Perhaps Johnson would be the perfect candidate for Wall Street. He's a libertarian, free markets, but not crazy. Anyway, he has very low chances because of the system in the United States where it's the winner takes it all on the state level, and it's a system that favors the two big parties and not new parties.
Okay, so I think we can move. Well, we have the Jackson Hole this afternoon and tomorrow, but what will happen next week? Yohay, we have non-farm payrolls, and we have more data, we have the month-ending rebalancing. What we can expect for next week?
I hope we'll get much more action next week, and I have good reasons to believe so. As you said, the non-farm payrolls. Secondly, it's back to school. August is ending. We also have, it's the turn of the month, we have new data from China. We have reactions to what will happen or will not happen at Jackson Hole. So I think expectations are high. Monday, it's a bank holiday in the UK, but so that could be a slow start like every Monday, but then towards the end of the week, it comes September, end of month flows as usual on Wednesday, so I think the markets will wake up. Will be much more interesting than the reaction we've just seen to the GDP.
Okay. For technical analysis, Valeria, what we can expect for the euro dollar?
I can hear you properly. I hear you like broken. What did you say? Sorry.
Okay, sorry. In terms of technical analysis and forecast about the euro dollar, what we can expect for the next week?
To be honest, I have been writing about this for a couple of weeks already. This is my weekly chart, you know. And if we draw a line around 800 and another around 1460, in fact, which is the 660 pips range, the pair has been trading within those levels since early 2015, right? Over a year and a half, and we have been trading in between 600 pips. So, talking about a trend in euro dollar, way too bold at this point. You know what I mean? It's there's no trend in here. There's nothing. What I can see is that if we take out the highs we posted last week around 1360, we can go up to 1410, 1420, and then retest that 1416. You know, the pair can even spike above this level and reach that 1615 we posted in May, I believe it was. But I will expect it to come back quickly below 1460. No, there's no trigger enough at these days to push the pair outside this wide range I'm talking about. I know we are pressuring the upside, and I know the market is disappointed sort of on the greenback because it's not rising rates. But to be honest, there's no real reason to buy the euro because of the economy going good or the ECB moving outside of the easing path. In fact, the ECB will probably extend its facilities at some point, right? We have been hearing about that these days. So that's what I'm seeing in the pair. And towards downside, I do believe that the key support is around 1160. There's no scope for slides until we break below it. If we move, however, somehow below the 1160 price zone, we can go down to 110, and that's the most I can say for the dollar to Venezuela. And I'm being really generous about the euro dollar, really generous about the movements. Uh-oh, take a look at the market.
Market is moving. Valeria,
Yeah.
I don't have a good sound from you, on your side. Valeria?
Yeah, I'm here.
No, your sound, I don't see sound. Okay, it's moving.
I don't have any good sound from you, sorry.
Yeah, I also hear you broken, Mauricio.
Yeah, Mauricio, you're broken.
Okay, sorry. And now?
Better.
Okay, sorry. So the market is moving. And
Not much, but
why it is moving?
I can't see any reason for the drop in the US dollar. Anyway, I don't think the move is quite significant, so
yeah, commodity terms are showing the most interesting moves. And the Swiss revert violently, all the early gains.
yeah, Kiwi dollar, yeah, as you said, commodity currency. So the Kiwi dollar is making yet another attempt to break higher. Earlier this week, it reached a 14-month high, but retreated very quickly. So maybe this time is different. Or not. Yeah, 73.40. Okay, so some late reaction to the weakness of the GDP report. It wasn't surprising, but still negative. But it might be just positioning towards the Jackson Hole speech from Janet Yellen later today.
No, I don't see.
Okay.
I'm watching, I can something I'm reading around, but seems yeah, there's no reason for this move. Markets are extremely thin. Don't forget we're in summer, sorry.
Yeah, some people are changing money back from their
Uh,
vacations.
the pound moved 15 pips, euro 20, not even 20. And the dollar Japanese yen, despite large candle, it's not even 20 also. It's just that market has been so tight before that we see these candles and we believe that the market is actually doing something. But if we measure the movements, still the dollar is under pressure, which means the market is losing its faith on Yellen's ability to trigger a dollar rally, and maybe that's the reason behind this.
Valeria and Yohay, we have a question from the chat from Kevin. He's asking for any idea on US dollar South African SAR run. You know, if you have any idea?
I have never watched a chart of South Africa.
Oh, not familiar with the charts, but I heard this week that the finance minister has been summoned to give evidence in the police for some alleged scandal, and it seems like a political thing. Anyway, markets didn't like it, and the South African rand sold off. So that's the news that I know regarding South Africa this week. Finance minister in trouble. The market doesn't like it, but yeah, again, I'm not following the charts. Sorry.
Okay, guys, what do you think to make a wrap up? Then
Yeah, I think so.
can
No.
finish
Yeah.
if we don't have any other questions. Yeah, first, if you don't mind. Valeria?
Okay. Well, we had some data coming from the US. The first revision of second quarter GDP. We had a first reading. This is the second one. It came in as expected. Trade balance came out better than expected. We have a slight improvement in personal consumption expenditures, but the fact is that the market is only focusing whatever Yellen may or may not say in a couple of hours, right? It has been for all the week, so we are seeing some dollar weakness. I do believe that it looks a bit exacerbated by market volume, but actually I'm not seeing any pair moving outside its early week range, so little to add at this point for the currencies. Anyway, I don't have too much faith in Gillian saying that, yeah, we will raise rates next September. We are ready. We will go full Monty. You know, I do believe that she will offer also cautious stance, and that will probably put the greenback under forward selling pressure after the event. It's anyway a wait and see.
Okay, thank you, Valeria. And what do you think, Joe?
I don't have too much to add. Basically, markets are looking for Yellen's speech Jackson Hole, and they didn't want to really move before that. And as expected, GDP revision, which was minimal, provided the excuse not to do much. I think that the slight, very, very limited weakness we're seeing in the US dollar is, as Valeria said, related to expectations from Yellen and not a reaction to GDP. Hopefully we'll get some action from Yellen, either very dovish, sending the dollar lower, or surprise hawkish, which has low chances because the Fed is usually dovish.
Okay, guys, thank you very much for coming today. This is the day after we have signed the final agreement between the Colombian government and the FARC, so this is a happy day in Colombia. I'm
Yeah.
not in Colombia, but this is the first time that we will live with not that war in the last 60 years. So I am really, yeah,
Yeah.
hope I have in a hope for that. Thank you. Well, okay, thank you for coming, Valeria. It has been a pleasure. Yohay, as always, has been great to talk with you, and see you next week for the next event and your weekly shows. Okay, guys, bye bye.
Okay.
See you.
Thank you very much. Bye bye. Have a great weekend.
Yeah. Good weekend to everyone.
Yeah. Have a good weekend. Bye bye.